behalf of the Geneva Macro Labs team, a warm welcome to our webinar, Rethinking Capitalism, Imagining New Ways of Life and Work for the 21st Century. I think that's a bold statement already, and I hope you all come with ideas, comments, and reflections for such an important topic. I will be leading you through the next 60 minutes alongside my colleague Takhmina Nasimova. Takhmina is a Geneva Macro Labs executive board member, but also a blockchain for impact thought leader. And we are very happy that she joined Geneva Macro Labs in the past, and she has been a very active member. And myself, I think most of you know me. I am Marianne Schörling. I'm head of stakeholder engagement at the Geneva Macro Labs, and I'm also part of the executive board. Give me a second. I would love to share my screen because, in fact, we have prepared a presentation for you that actually shows beautiful pictures of our speakers tonight, and we also prepared an agenda for you to introduce the format of our evening. So first of all, a short intro by myself. We will then be moving straight to Gaya's intervention. Gaya Herrington, I'm very glad and delighted that you could join us tonight. I will share in a minute a few words about your background, but for the moment, we leave it at that point to introduce your topic, which will be all about well-being economics. And Gaya, for those who don't know you yet, she works at Schneider Electric. Right after the intervention, the presentation of Gaya, we will be moving to you, Marco Dondi. Thank you for being with us tonight as well. You work at McKinsey in Switzerland, and you will be sharing something quite interesting, a personal perspective on how to outgrow capitalism. Now, I think expectations are high, given the topics of your intervention that you've chosen. And I'm looking forward to the Q&A session that will be moderated by Takhmina, who will have a look at the chat throughout the interventions. As usual, if you have a comment or a question to the speakers, while they're speaking, just put them into the chat, and Takhmina will then will be picking up your questions and comments and will lead us through the discussion. So let me share a few words about the Geneva Macro Labs before we start. We are a community-based think and do tank, and we focus on harnessing the potential of emerging technologies for a more sustainable future. I will not share more about us, as I would love you to visit us online on our, I think, exciting website that shows you the kind of work that we're doing. You will also see what kind of events we were hosting in the past. We combine different approaches like design thinking, collective intelligence, hackathon, system thinking, and agile development to see how we can actually move from ideation to implementation of solutions that bring us closer to a sustainable future. So let me now properly introduce Gaya Herrington, who will be our first speaker. Gaya Herrington is Vice President of Sustainability Research at Schneider Electric, which was voted to be the most sustainable corporation in the world in 2021. And Gaya studies how environmental, social, behavioral, and economic trends interact and what systems changes are needed for achieving true global sustainability. Gaya has given keynote speeches and guest lectures around the world and is an advisor to the Club of Rome, which is an international 100-member club of scientists, economists, and other thinkers. She has a master's degree in econometrics from the liberal Amsterdam University and another master's in sustainability from Harvard University. So Gaya, thank you for having accepted the invitation to speak. and to share your thoughts tonight on the systems change or systemic change we would need for new ways of life and work for the 21st century, which actually are built on sustainability rather than on growth. At the Geneva Macro Labs, we have a special approach to sustainable development, which is really all about engaging an international and interdisciplinary community to identify best practices and advance the development of sustainability-oriented innovation, which means being as concrete as possible on what it takes to build a sustainable future. And the topic of capitalism plays an important role, as capitalism is one of the economic models that we see at play in the context of sustainable development. Gaya, you have been active now in the sustainability space for quite some time, and you are a distinguished author on various topics that deal with economic growth. And tonight we would like to hear your perspective on the trade-offs between different policy goals, for instance, ecological sustainability versus economic development and concrete impact endeavors. So we would love to hear what you find out in your research and what a well-being economy is. Over to you.
Thank you, Marianne, for that introduction. It's great to be back here. First time I spoke at the Geneva Macro Labs, it was about my research that had just gone viral at the time, and I had a couple of headlines here on the right side. The message of my research is a little bit more nuanced, but you know, editors love the word collapse. And so it is what we're doing today, quite a bold undertaking, but at the same time, our current polycrisis is exactly, that's exactly what that polycrisis is requiring of us, right? I have come to conclude that we will not get there with just green innovation and increment and doing less bad. Basically, we need a transformation, and it starts from the very roots of things, which is also includes our economic system. So if you want to know more about my research, I will not be talking about that today. That webinar is still available online. You can still look at the journal article that was published at the time. And since then, I've published a book about it with a lot more detail about all of this, which is free for download as well. So let's see. Oh, there we go. Very briefly, this will not make a ton of sense because this is just one graph from my research, but what I concluded at the time was that we are right now at a now or never moment in history. And what we do in the next 5 to maybe 10 years on a global scale will determine humanity's welfare levels for the rest of this century. So this is one graph about the human welfare variable from a world model that was done already 50 years ago by the Club of Rome. And that I've basically concluded that empirical data, which is the purple dashed line, lines up pretty closely with what the model already forecasted half a century ago. And so, as you can see, there are different scenarios that were created with that model. They haven't diverged much yet, but they will, and they show dramatically different developments for the remainder of the 21st century. What we would want to is, of course, keep the highest levels of welfare, which is the stabilized world, the yellow line, SW. We are not closest to that. We are closest to business as usual too, which depicts a collapse in many things. As you can see, a steep decline setting in around now as a result of pollution, ecosystem collapse, or basically you could argue it's the climate change scenario. So what is happening in the stabilized world scenario? The difference between that scenario and the others is basically that we let go of the growth pursuit. And so that since then, this was originally this model was published in a book called The Limits to Growth, which was a bestseller at the time, but then viciously attacked and very effectively buried, very impressively so, but not in a good way. And so now we are at this moment where we can still change our current trajectory, but we're not on that trajectory now. So it would have to be a deliberate choice of letting go of continuous GDP and profit growth all the time, which of course goes to the heart of capitalism. And so that's what this is really about, that we have to define our core priorities in society if we want to maintain our levels. It's not going to be possible to increase our well-being levels anyway, growth will halt one way or another soon. We already see a slowdown in global growth. It will probably halt one way or another in the next 5 years, 5 to 10 years, maybe. This model isn't very precise. But we have a choice whether we maintain our levels of well-being or whether they go down. So that kind of paradigm shift is what I call a shift to a well-being economy. And so that's what I will be talking more about. So I can't go into all of this, but feel free at some point, this will be published online, to pause it. But really, we have these what we are typically not aware of is that we have many mental models or mindsets, and which are unconscious assumptions about how the world works, and we use that every day. And so a lot of these we will have to update to something that's really more suitable for living with this large population on a finite planet. And so, for example, what we call economics is really only neoclassical economics, and we have so many more schools that we probably should have more of a toolbox of all those different, including newer economic models like donut economics and that sort of thing. What I do want to focus on is the last one. We all are familiar, I think, with the Homo economicus. This is an idea that we have of ourselves, how we work, and social research is very clear that that doesn't really describe us very well. And we're much more of a homo duplex, meaning when our needs, our basic needs, are not met, we are indeed selfish and short-term focused. But once they are met, we actually become very different, and we become very caring and curious and very altruistic, much more altruistic than Homo economicus could ever be. And so there's a lot of promise in that fact of who we actually are. So how do we go from there to this well-being economy that I will discuss a little bit more? One way that we see that is actually really increasing right now in the debate is degrowth. So this has been around for a while, actually, and it was always very fringe. Especially in Europe, it's being discussed more and more and very seriously. But even in the US, the capitalist gravity center of the world, you see it being covered more and more in what I would say are mainstream media outlets like CNBC, Harvard Business Review, and Nature. And this is really this idea of, okay, very practical. How do we get to an economy that's sustainable, that can last, this post-growth economy, so to say? Well, really, that's about the fact is that in the developed countries, we are already above our ecological footprint. It's quite simple. And so if we want to have a well-being economy globally, that means that there still needs to be some resources left, some growth potential left for developing countries. And that is not possible within limits, unless, of course, we in the West deliberately shrink our ecological footprint. That doesn't mean shrinking GDP necessarily, but it might, and I think that's okay. Because in a well-being economy, we wouldn't be focused on that GDP growth as much as we have been for the past few decades. So is this feasible, this idea of letting go of growth, and then what do we put in there? Well, actually, you know, throughout most of history, our economies were much more were actually structured around just exchange. It was never about the ultimate pursuit of growth. It wasn't about endless concentration of surpluses. It was more about exchanging, and in that sense around to improve well-being in the first place. So actually, really, this idea of endless growth is fairly recent in history. For a long time, a longer time than we have been chasing it. It was actually considered a bit crazy, if not just immoral. So it is firmly rooted in our values. We also see that people are ready for this, that they're asking for this. If you look at surveys around the world, people want deep systemic changes. They don't want green innovation, just they know that they're losing trust in institutions, we're losing trust in one another. And this is all very much spurred by, for example, the growing income and wealth inequality, so the concentration of wealth that you will always see as long as you keep pursuing growth. And so you see, even again in America, that the younger generation is now more positive about socialism than about capitalism. And that doesn't mean that the future is socialist necessarily. It just shows, I think, that the majority of people want different systems, and that the current capitalist story is clearly dying, and of course we're looking for a new one. And the new story, I would say, is where we still have money, we still trade, but we replace the growth pursuit by meeting human needs, not through growth, but directly within ecological boundaries. And that's something that, again, this is on the right. In the top, you see all the literature that's been scanned by Google. And you can really see that reversal where green growth, which is where we hang on to growth, right? But we do it in a way that it doesn't trash the planet. You know, at this point, it's unfortunately, it would be great if it worked, but it's just a myth. It's just wishful thinking. You don't see it occurring in the empirical data. And so you can see now that there's this reversal where people are starting to realize that that's not really the answer, and that degrowth and planetary boundaries are being mentioned increasingly more, which I think signals going away from that fringe that I talked about earlier. So again, especially in Europe, you see that a majority is actually in favor of some post-growth. They certainly carry the post-growth values and some post-growth economic systems. We had the Beyond Growth conference, I think just only less than 2 months ago in the European Parliament. So it's very much growing there, but it's not just in Europe. It's growing all around the world. And so even here, where I am now in Washington, D.C., in the US, even here you see, again, more, even in the corporate sector, even economists, World Bank, all those Bretton Woods institutions, even they are looking into this and saying, well, you know, they don't go quite as far. You know, Deutsche Bank is still having quarterly earnings reporting, but even they are talking about, okay, well, even they admit the current system is not working. This obsession with economic growth is clearly not delivering what we thought it would be. Nobel Prize-winning economists say, well, this whole GDP thing chasing is, we need to let go of that. And so that's what I want to leave you with, that, you know, people are ready for change. And I think this well-being economy is adhering to a broad set of values carried around the world, not just in the West, but really in all kinds of ancient myths, Ubuntu in Africa, this whole concept of balance that you see in Asian cultures a lot. And so that's what I want to leave you with today.
Thank you, Gaya. Thank you for framing this conversation towards an optimistic outlook, what the future could bring. And you just shared that people want systemic change. We can definitely see that in our discussion within our community. And you also made a point about replacing growth with meeting human needs within ecological limits. That brings us well to the intervention that Marco has prepared. Marco, thank you for joining us today as well. Let me share a few words about you and then we can move to your presentation. Marco Dondi is an expert associate partner at McKinsey & Company, advising public and private organizations in education, adult training, systems, and labor markets. He joined McKinsey in 2009 in Milan, moved then to Dubai in 2016 and to Geneva in 2021. He leads McKinsey's research on future skills and McKinsey's knowledge partnership with the European Roundtable of Industry, ERT, for reskilling mid-career workers at the scale. Outside McKinsey, Marco is the author of the book Outgrowing Capitalism, Rethinking Money to Reshape Society and Pursue Purpose, published in 2021 by Fast Company. And we are glad that tonight we will hear some golden nuggets of this book. And Marco also holds an MBA from NZ from 2012 and a master's degree in management, finance and economics from Politecnico di Milano from 2009. Now, Marco, hearing what Gaya just have said, the title of your book indicates that you would agree with her that we need to stop business as usual. Could you provide us today with concrete ideas how such a shift actually could look like? And how can we introduce such a paradigm? Where to start? We're looking forward to your thoughts on that, and then we will start the Q&A session with the audience. Over to you. Marco, hearing what Gaya just have said, the title of your book indicates that you would agree with her that we need to stop business as usual. Could you provide us tonight with concrete ideas how such a shift actually could look like, and how can we introduce such a paradigm? Where to start? We're looking forward to your thoughts now, and then we will start with the Q&A session with the audience. Over to you.
So if you move to the first page, I mean, first of all, as you see, this has nothing to do with my McKinsey work. I'm bringing a personal perspective, and therefore this is in no way the McKinsey position. And indeed, I do agree with many things that Gaya said, although probably my view on nuance will be my view of growth will be a bit more nuanced, but I think we can also have that part of the discussion. So if you go to the next page, starting point is what is the goal of society? And indeed, considering that well-being, as Guy also mentioned, it's different definition of well-being, whether you look at happiness, life satisfaction, or life fulfillment, is that most weakly correlated to any further income growth. I think there's basically no correlation in high-income countries, except if you take some people that are struggling. There is always that comfort threshold, as Gaya mentioned. Below that comfort threshold, it's really tough to live a fulfilling and happy life. But once you're above, it doesn't really matter, right? And so this is then calling in question, why growth, right? The reality is that as long as we live in capitalism, growth is absolutely necessary, right? You can't repay debt if the overall system doesn't grow, and therefore you would have to, continuous collapses. The pension systems are based on a mechanism of continuous growth. Otherwise, they would not be sustainable, and we would not have a retirement. Just to keep pace with productivity, you would need to continuously grow the pie. Otherwise, you would have a limit into employment. And then if you have read Piketty, you know that we need to actually grow further than the growth of the returns of capital. Otherwise, by nature, the society becomes more and more unequal. And so this is the question of, what to keep and what to change of capitalism, because clearly, as long as we keep in capitalism, growth is absolutely necessary. So if you go to the next page, in this question, it's always good to see the trends, right? So, and I would split between trends that are already here. This is, decades-long trends that we just need to acknowledge. And then some that are emerging that maybe are still, open up for debate, right? Climate change, no question, it's been here for many decades. Increasing inequality within each of the countries, I think this is also something that is decades long, and now there's a bit of a reversal because of the recession, COVID, and what has happened, how governments reacted to it. We have seen that there has been a race to the bottom for taxes and tax avoidance. So governments to raise enough taxes to correct the market failures has been increasingly challenged, and this has therefore led also to an increasing amount of debt compared to GDP, which is both on the public and private, right? So this has been decades in the making, and what this says is, the first two needs really some redistribution of money to quickly fix climate change and inequality. The problem is that the standard mechanism of taxes is at the end of the rope, right? The taxes and debt have gone probably as far as we could pull them. And so therefore, what next? What's the plan A, given taxes at most should be a plan B? Now, there are a few emerging trends, but these are conflicting in direction, right? Because to some extent, the West is aging, China as well. Therefore, that is, if you want, decreasing the amount of people that can work. At the same time, artificial intelligence is promising major impact on productivity. And so, short, mid, long-term balance of how much people actually we need to keep employed, how much we need full employment, and how much this is still part of the societal goal, it's still up for debate. If you go to the next page, what I start thinking more is, okay, we need money to fix these solutions, and taxes are possibly not the only way, right? And so it's basically really considering what is money, right? Because it used to be physical, but this is no longer the case. Since the fall of the gold standard, money is not physical. Most of money actually is generated every year, where when banks increase their loans and therefore the deposits that people have in the market. This was, post-COVID, given there's been a massive expansion of central bank balance sheet, about 20% of the growth has been through central bank balance sheet growth. But before, 95% of all the growth of money and of credit and of debt, it was linked to commercial banking creating money, right? In the free market mechanism. When you look at the impact, I mean, the theory of this is that this free market will generate money put to good use because that money need to repay debts. And this is the only way to create money and value rather than just money and inflation. The reality is that most of this money, therefore, first of all, it is linked to debt, right? Like you can't create money without debt, and this causes instability. The second is that instead of generating value, this money mostly is going to inflating asset prices. So either real estate, most of loans goes to real estate, and therefore they keep growing the value, and financial assets, because a lot of this money is then in financial investors that use it for speculative purposes. And ultimately, again, just for everyone to be aware, central banks really only buy and sell assets, right? There's no money creation of central banks. They create money, but then depending on your definition of money, ultimately they use it to buy asset and add money in the system, taking away asset and reversing this when they want to reverse the direction, right? So this begs the question. This doesn't seem to be a great monetary system. The free market, the capitalism mechanism to create money doesn't seem to be working great, right? So big question, can we create money and directly put it into fixing climate change? And in my case, what I propose is some sort of universal basic income that gradually limits the inequality. And if you go to the next page, I'll quickly go through some of the proposals that I mentioned in the book, but I'll try to keep it quick. Otherwise, as you mentioned, I can speak for a very long time. So I propose something different, right? Something that is called monetism. And again, the starting point. So the focus is changing the way money is created and therefore how to manage inflation, because the two things are of course tied. But it starts really with the new focus, right? And indeed, I agree that GDP growth is something that capitalism need. Society doesn't seem to need growth because it's not as linked to well-being anymore. And monetism therefore can be agnostic, right? If there's growth, can be good. If there's no growth, we should be able to find a way in which society is sustainable without. And so I created a framework that I don't want to go into the detail, but to say, the focus should be indeed pursuing well-being of all individuals within the boundary of ensuring the same opportunity for future generation. And these are the four areas that I would that then I look into the system and how I developed it. If you go to the next page, this speaks more to the mechanics, right? In a nutshell, the first creation of money, because then money circulates in society, but the first creation, instead of making it happen by commercial banks, it's central banks that make that creation. And either they inject it as a universal basic income, because this is the most equal and there's no dispute that there is a right way to do it. It's new money, so no one owns them. You just give it to everyone. But you may argue that some of this new money can be put to better use. And therefore, if you create some conditional transfers, like, for those of you that are in Europe, a lot of the new money that the European Commission is giving out, it's conditional to achieving certain things. And basically a similar mechanism where the money though doesn't have to come from, the taxes and ultimately public budgets, but saying, there is this new money creation every year, we can make it available, conditioned to the use that are most priority, which, sustainability and the climate change, fighting climate change clearly are high in that list. The second pillar is, of course, now, depending on how much you decide to push this first creation of money, you need to think of how you manage inflation differently, right? And this, to me, today we're seeing the challenges of managing and fighting inflation of central banks, right? Like interest rates are a tool that is, I haven't put it here, but it takes really long to act. It has a lot of consequences, which might be often to crash the economy, right? And so there are much faster ways to manage the demand side of the economy, which is through taxes, right? And so if we start eliminating some taxes that are not necessary, because it's not all taxes are if you need to fund everything through taxes, you have many more taxes than if you can create some money directly and to use it to social purposes. Then there's been a lot of talks about one of the core causes of inflation is that companies are taking advantage, right? They are swimming in profit. Even the IMF came out with a statement recently. And so the idea is that if the companies are incentivized to reinvest any extra profit that they make, that will naturally lead to growth rather than to inflation, right? And so creating a taxation system that the proposal that I make is companies pay higher tax rates if their returns are higher. And so they're incentivized to more reinvest gradually the extra profit that they make, and therefore they invest more in long-term growth. And then other taxation system ultimately, because still it's important to keep inflation down. And today central banks say I'm going to increase interest rate as much as it's needed, potentially crashing the economy. I argue that increasing selective sales taxes, oftentimes on products that are the luxury one, and therefore you make this system not regressive but rather progressive. It's a better way to manage inflation. Now, lots of question on governance, right? Like now central banks have independence, they have a certain mandate, so there's various options. Happy to speak about them. They are in the book. And then the pace, right? Like it's how fast do you go towards it? And this is back to the question of how much do we really need labor, right? The more we need people to work, the more a UBI doesn't really feel ready, right? It feels too early. But the more you consider the UBI is something that can allow more people that are close to retirement or they need to take care of someone, some of them to exit the labor market and create the condition of having a tight labor market that increases the wage and the contracting power of workers, the more this can actually be beneficial, right? So I think if you go to the next page, and I'll close here if I remember correctly, some basically concrete ideas on where to start, right? Because the book paints something which is probably hopefully in the next decades and in my lifetime I'll see a good chunk of it going in this direction. But I think concretely some concrete idea that could go in this direction, right? I think at the global level, the IMF already has special drawing rights, right? This is the equivalent of a global currency or the closest we have today. They could create this to be and allocate them for combating climate change, right? So where does the fund to compensate emerging markets from their lost growth opportunity? They could come from special drawing rights. So that's one idea. At the monetary union level, right? So this for Europe it would be at the euro level, right? Not each country can do it. But if central banks create a digital currency and they can pay directly to citizens, this is a much better alternative to quantitative easing. And many have studied these solutions, right? Like instead of making credit cheaper and increasing debt and then having to manage the consequences, if you want to increase the purchasing power of people to sustain the economy, just put money in their pockets and central banks can do that if they have the digital currency. And then to counterbalance, they can always start playing with the reserve requirements for bank, right? Like this is if there's more money in the system, then you play with the reserve requirements instead of interest rates. Few ideas at the country level. I think be more focused on well-being, right? Like starting to really measure the determinants. So not all through growth, but what are really the determinants of well-being in each of the country. And I think, for example, in Italy actually is a country that now asks for new policy recommendations to also have a projection of the impact of well-being and the various well-being components that they have. And I think either in Italy or in Ireland is also enshrined in law. Second idea is adding the value of assets in the public balance sheet, because you start ensuring that their protection as value, right? And this allows public to do much more with their money, and ultimately adding a floor payment scheme for unemployed and low-income people, which is kind of a start of a UBI. But and my idea is that like on the pace is you always want to have the productivity growth of a country that goes together with the wage growth of the same country. If you don't have these, you start having inequality and you start having the power of the workers to fall back. and you have this inequality. So ultimately, you always want to keep a tight market, and you increase the floor or decrease the floor as much as you need more or less worker to come into the labor force. So these are just some ideas. The book, I guess in the next page is the book, but it has much more in-depth explanation, and happy and looking forward to the discussion.
Thank you, Marco, for introducing to us some key takeaways of your book. We will share with the audience the link in a minute. Also, thank you to you, Gaya, for your intervention. I think your both presentations, they complement each other well. Since you, Marco, you built on the idea of introducing a new paradigm shift, and you proposed some concrete avenues of how that could happen. I'm now giving the floor to Takhmina, who will lead us through the Q&A, and would love Takhmina to revisit some of the points that both of our speakers have raised. Over to you.
Thank you, Marianne. Thank you very much, Gaya and Marco. It was very insightful discussion, presentations on the two researchers that are so important for the next steps of rethinking the capitalism, right? My outputs from this presentations were basically entering the new economy is not easy. There are a lot of strategies that need to be taken in terms of the society level, right? That discussed by societal level, that discussed by Gaya, and the government and international institutional level discussed by Marco. So let's open the discussion and focus on the most important to me was that people are ready for the change, right? The concept of this balance in life and the change. How does it all comes together in terms of the interception of the societal views and the government perspective? Marco and Gaya, there would be a question to you both, and if you want to share your vision on this.
Yeah, I think that interconnectivity is one of the key things also of that world model at the time. That was really, I studied econometrics, so I'm very familiar with and I worked at the Dutch Central Bank. I started my career in finance, actually. So I'm very familiar with the mental models there and the models that are being used, which typically do not allow for this enormous interconnectivity that we have in the world to be modeled. And that's why you're going to miss things. For example, the idea that you need growth to solve poverty and inequality doesn't take into account that we live on a finite planet with limited resources. And so if you have a system that needs growth, that necessitates growth to lift people out of poverty, then clearly if that system needs to change, because we cannot have growth on a finite planet. And we see that already, right? We're running out of the pollution sink that the Earth offers with climate change, but not just climate change. We have microplastics. We all have microplastics in our body right now. They're very ubiquitous. The sperm count has plummeted by 50% over the past 50 decades, because of all the toxins and the pollutions in our environment. So, and that's just the pollution, of course. We have the resources. We're running out of clean water to grow our food. We're running out of, there's desertification, so we're running out of arable land. All those things. So it's that's why it requires a much deeper change. Of course, to answer Michelle's question as well, I think he's very right that finance and, of course, how we work with money is an absolute key part of the solution. So it's not just one. Another argument I hear very often is, well, we will innovate ourselves out of all these resource constraints, right? That's the promise of green growth. It's basically hoping for some revolutionary technology that is still to be invented. Maybe at some point we have that, finally, the nuclear breakthrough. I don't know if that's, I think this might be a bit irresponsible given the current stakes of the planet to hope for that. But again, technology is going to be a key part as well. That's another one in there, right? Technology is right now is in many ways very disruptive, has a lot of social impact, environmental impact. It can be a tool for good. It can also be a tool, it's going to serve the goal of the overall system. So as long as the overall goal stays growth, it's going to cater towards that at the expense of social and environmental impacts. So again, if you don't change the goal of the system, everything else ultimately will go towards that. And that's why you still have this greenwashing that Michelle was mentioning, because we all kind of pretend that companies have a different mission, right? If you go to a company's webpage, they say, this is our vision for the world. Nowhere there is profit typically mentioned. This is our mission. This is how we improve well-being. But if you look at the behavior, sometimes the behavior of a system is very different than its stated goal. And so if you want to know the real goal of an organization or any system, look at the behavior. And so to answer his question, yeah, I think, you know, I think it is very important to go a little bit further back in time, where we are all grown up in this growth paradigm. And as soon as I say letting go of growth, people hear that I'm anti-growth. I'm not anti-growth. I think it's fine if it contributes to well-being. If it truly delivers delivery from poverty, I think it's great. Let's do it. But if it does not, which it often also does not in this world, I don't think we should bother. I don't think we should incur those environmental and social costs. So I think if you look a little bit further back in history than just a few decades, then you see that actually always throughout history, we've had this notion that society, that economy is embedded, wholly embedded within society, and society is wholly embedded in the environment. If you flip that upside down, you get a layer of the financial sector, and on top of the economy, on top of society, on top of a sliver of the environment. And that's basically what we've created now. That situation will always be unstable. And so we have to flip that back up around again, where you have a solid basis of the environment in which society rests, where you have the economy, and then on top of that, you have finance. So I think it goes a bit much further really than that. I agree with a lot of the specific things that Marco mentioned, but I think we need to go a lot further. I think financial organizations need to be, you know, there need to be a cap of how big they can be. For example, you can't be too big to fail. So there are many more things I think that we should do, and I'll stop now because I know we're on time. Thank you.
Thank you, Gaya. Marco, do you have anything to add, or we can move to the next question?
Look, I'm a bit less, I guess, optimistic and maybe focus on the removing growth from, and maybe it's not removing, right? I'm fully on board that we need to focus more on what gives directly well-being, right? So that's important. But ultimately, governments will. So this needs to come from governments, right? It is clear that your private companies are not going to decide from one day to another. I'm gonna not try to grow my sales or improve my products, right? Like, and it's good that they do, right? So this is really a macro action, not a micro action. It's not gonna come from the companies. And government ultimately, you know, when you think of what people vote and what people like, they don't like taxes. If you say that, you know, we grow less, that means less income. That means more taxes and less income. So I don't think people will be up for this, right? So and therefore I don't see government trying to at all stop growth. And personally, I also don't think that they should, right? In developed countries, growth has already fully decoupled from carbon emissions, possibly not from other planetary boundary. But in many countries, you see that growth is still going up and CO2 emissions is slowing down, right? And so yes, this is not going to happen in other countries, right? As you know, China and India are still going to pollute a lot more on a per capita basis. Still, the developed countries are still too high, so agree that those need to come down. But it's I think the narrative that is more likely to go for is companies needs to be more responsible. You know, everyone needs to try to become, you know, to bring the emissions down. But no one is stopping growth because no one can realistically tell companies, don't improve your products, don't try to sell more. No one will do that. And I don't think it will be beneficial because these problems will be solved by companies, right? It is innovative companies that will find new way or better way to do things. It's companies that if there are natural catastrophes that unfortunately will happen because we didn't react in time, but those that will fix those natural catastrophes are still private companies that will have to grow their capabilities and ability to manage the disasters, right? So ultimately, it's all companies that need to, you know, improve the way that they do things, and we need more companies that do this for the right things. So ultimately, if I link it back to what's not written in the book, but it's really what it may happen, is that you know, these tax rates, you're going to put a lot of taxes on the polluting industries or on the you know, the things that are, you know, luxury, that don't really bring well-being, but, you know, they're happening because people have a ton of money and therefore the companies go after the money, right? So this is where you want to reduce the resources that go there, the businesses and the people that are working for, you know, polluting stuff and luxury good. And you need to move more of those people and more of those companies and resources to activities that, you know, mitigate climate change, innovate, and do things, also simple exchanges of services, which, you know, increase GDP, increase income. It's services, right? So education is not polluting necessarily, right? But we need all more education. So we need to grow education, right? So I guess, again, it's a different perspective. I guess starting from the point that indeed I don't see any government ever is going to try to stop companies to grow.
Great. Thank you so much,
I do think we need to stay clear on the data. So we can have different perspectives based on the data, but decoupling is not visible in the data. I think it's very important to stick to that. So you have sometimes that. So you have, of course, what's necessary is absolute decoupling. So you keep growing, and there are no greenhouse gases. This is nowhere in the data. Some countries show a little bit of a, you know, the GDP is growing faster than their carbon emissions, but nowhere is there enough, is there sufficient decoupling. I do think we need to be clear on that.
I may have misread, but there was an economist report with at least a dozen of economies that had decoupled. But I'll look into it, and maybe let's share offline after you know, the reports to see indeed to get the data right. Yeah,
that would be interesting to see. Thank you so much, Marco and Gaya. We have Tala, who has a couple comments to add on to this. Tala, would you like to unmute yourself and ask your question or comment?
Yes, thank you. I was going to respond to what Gaya was saying, so it's a little bit off topic from what Marco was talking about, but I wanted to go back to values. I think that's an important area to explore, especially since, Gaya, you're living in Washington, D.C. and have recently seen 2 Supreme Court decisions that are based very much on containment. Now, containment, I would say, is very much looks at the intersectionality of capitalism and colonialism or colonial legacies. And why is that important? Well, none of the people who have been opposed to women having abortions want to take care of these babies once they are born. They are enacted laws in the South where it's mostly Black poor women now who don't have access to reproductive health and are being forced to have babies. And I can almost guarantee that the people in the Supreme Court do not want to take care of the baby once it is born. There is also the direct link between containment, this desperate need to kind of uphold colonial legacies. They're kind of sweating in their pants where they have now rejected excuses for university fees for people who are very poor, who need to get some of those fees, kind of relinquished. But the colonial legacies tied into capitalism just don't apply to 1860. I'm speaking about Bill Gates during the global pandemic and the arguments at the World Trade Organizations for patents and licenses to African countries to be able to produce and support their own communities in terms of vaccine and health policies. So when you're looking at the private sector, there is very much an underlying containment while at the same time extraction type of principle and value system. And that's very much tied, in my view, to the capitalist colonial system. Thank you.
I think that's an excellent point. I think that's I think the neocolonialism is a key part of capitalism. So if you look at the resources that are necessary for the consumptions, of course, in the West, they come from the poorer, basically the most of the world, the rest of the world. And if you look at how much that, there was recently a study done by Hegel et al. If you look at the financial flows, so the development flows that go from the global north to the global south, that's really just a fraction of really what goes back in terms of extracted resources back to the West from those countries. And if they could keep, and that's a whole thing that we can go into with these Bretton Woods Institute, the World Trade Organization, and all those, the policies there are not, are clearly still geared towards vested global interests, which are skewed towards the north. This is decolonialism in that way is also a key part of the well-being economy, and degrowth is explicit in that this solidarity that we need to see from the global north to the global south should be in there, because right now what we have is that the high carbon emissions, the luxury carbon emissions, basically, that you see in the West, that are only possible also because of the resource extraction. That's just an unfair burden on the world. And I think it's very important, again, I think everybody agrees with me on that, is that, the luxury carbon emissions of the West are not as important as carbon emissions from people that are, making those carbon emissions to meet their basic needs. And that's, again, why these new frameworks are focusing very much on needs versus wants. So in a new value system, you would have much more of a difference in needs versus wants. So needs are strictly put above any kind of wants. We're not anti-wants, just like we're not anti-growth. It's just they're not as important as meeting human needs first. Does that answer your question?
Yes, that's super. Thank you, Gaya.
Yeah, and if you're interested, we don't have time to go into that, but there's a work of systems thinker and historian Marianne Eisler that has really looked throughout history about these different paradigms, and that's also that goes very deep into values, and she distilled down that basically throughout history we've had, broadly speaking, two modes of organizing ourselves, and one is more based on domination, strict hierarchies. It's always exploitive and extractive. And then there's the other one, the partnership model, that has been more successful and more prevalent. But they're typically not the ones who write history, because history is typically just a recanting of wars, and they weren't necessarily investing much in defense capabilities. So if anybody's interested, the work of Marianne Eisler is very interesting there.
Thank you very much, Gaya and Marco. We had some more questions coming in, but we have to finish sharp at 5:30, and I will pass on to Marianne to close this panel. Thank you very much for such an insightful glimpse into the future of capitalism.
Thank you. Yeah, thank you as well from my side. Thank you, Takhmina, for leading us through the Q&A. It seems that we definitely need a follow-up on our discussion. And what I take away from your discussion now is that the well-being economy needs to build on a new social contract to meet human needs. And you also pointed out, Gaya, and also you, Marco, that in order to implement a new paradigm, there is a need to have we need a safe space for developing those multilateral collaborations that would showcase how a transition can be possible. But I leave it here. Thank you for having joined us tonight or the afternoon, wherever you are right now based, for this very interesting discussion. It has been a glimpse into a very bold topic, as I said at the very beginning, and I would love to share with you a couple of the resources that our speakers kindly now shared in the chat, so it will be as well in the comments in our when we share the recording on our YouTube channel. And with that, I say thank you and remind you, for those who are in Geneva, that we are hosting every third Wednesday of a month our in-person after-work events, where we can dive deeper into the discussions we are having online. And with that, I wish you all a reflective summer to think about what role we play. It's always easy to think about what government could do or somebody else, but we at Geneva Clubs, we are very do-oriented. So we would love to keep on the conversation with you of how we can actually implement tangible solutions. Thank you so much. Have a nice rest of the day, and please connect with us. We have our website ready for comments, and we would look forward to get your feedback on what our next webinars and conversations should focus on. Thank you, and bonne soirée de Genève. Bye.
Bye-bye. Thank you, everyone.
Thanks. Bye.
Bye.
Bye-bye. Thank you.